Okay, so kind of going into tomorrow with unemployment GDP and then like PCE on Friday, with it being supposedly big news and everything. Kind of where we're at for the week. So weekly open's been over here on Sunday, and as of right now, you pretty much have to be bearish until you get some kind of state change. All we're really doing is just rejecting highs, breaking lows, rejecting highs, and kind of over and over and over. So until we get a high that broke the low being broken and like significantly closed above, pretty much want to stay with this bearish, especially with this sell side here, FVG here that's pretty much breakaway, and then whatever else is down here. Now we do have all these bean turtled, which means it can be liquidity, but not right now, as it should be something that we just kind of keep moving lower towards, and then we'll ideally you slice through it all. Now, if it wants to do that Thursday, that's fine. Even something down into FAG down in here, and then shoot past it Monday, Friday, especially being below weekly open, and this is where the actual high impact news of the week is coming from. So you consolidating in essentially this large range just to move outside the range could be something for something like that. But very, very easily finish the sell model, kind of go down and everything like that. Now I will say with ES already running through Thursday's low, I'd be much more inclined to kind of the same thing with NASDAQ, hit something here, and then if it wants, start to move up, but ideally it would move through at least Tuesday's high. But if it's something where it just wants to, again, because just turtling highs, rejecting highs, breaking lows, over and over and over again, you want to keep playing that even when you're looking for a low that broke the high or anything like that. Especially even on something like oil, when you're just getting bullish moving up, and you start to actually look at this kind of fractal before New York. The highest high is here. The high before that is here, and you also have these equal highs right here. Remember, it's easier just to reference an old high and code it that way. So you combine that with also this high being broken here. Where did that low come from? It came from this low right here. So when the low that broke the high is closed below, that's your actual shift and CSD down and whatever else you want to call it. You then also get bearish turtle soup right there to help get you in that direction, because you're only going to snap out shorts to go short. And as you're getting that, you're still getting classic FEG continuations and all that all through New York. And that's really the big thing like that you want to look for, especially when you're like heavy distribution FEGs and just making new lows underneath those after the range is made. And then just playing that until you get low that broke the high, anything like that, and then going from there. Because even this, saying that this is now bullish, you're now back bearish again. So if you're going to look for that, you need to flip the delivery backwards or see if something like this wants to hold, and then go from there. But you should be able to see that same idea, low that broke the high, high that broke the low, at some point, to at the very, very least be able to shift backwards to whatever's either in the higher time frame or going from like buy model to sell model off just literally a retracement. Now, as for Dow, it's just been sinking hard, which is fine, but this VIB here has now got another down candle, and it's only had one up candle. So in order to fix this, it eventually needs an up candle through this price level. Doesn't have to be tomorrow, doesn't even have to be Friday, but that's what needs to happen at some point in order for it to be fixed. Same thing with this one here if you want to say there is one down here. Same idea. It's gotten now the down candle. It needs a buy body or buy candle back through it. As for Dixie, be very, very interesting to see kind of what to go off of, because very, very easily go off the order block here. You can sink back into the range. You also have that VIB there again, so going down to like a 1 hour. If you want to, say, run this high, and then look for some type of state change up here at the right time, meaning 8:30 news, very, very easily wick, get revised, go somewhere else. Would make the most sense, honestly, for a GDP number, especially with it being preliminary, just to revise it, play the news, and then fade the news. But because you could very, very easily get bullish print, revise to bearish, indice sync, finish sell model, sink into wherever, and then reverse back through it on the revise, honestly. So, especially Dow, it can get a super aggressive LR through this retracement here, just with how all these failure swings just getting stacked, stacked, and stacked. Now, even getting a turtle like all the way down here, that means that they don't need to come back for this. If they needed it, they would have got it. So, with that being said, if it's able to come back through, it should be able to rip through all of it. Whether it wants to do it all at once or LR like through a couple periods of candles, that's fine. But in terms of how it moved, and especially turtling down here, that it's telling you that they don't need to come back for these. Same thing with NASDAQ. It coming down for whatever it wants to. This is still bearish. Full stop. You get rid of everything for 1 second and just look at the candles. Or if you really, really want to, turn off wicks. And you can see the bodies. High broken here, or even broken here, whichever low you want to say it's from. Close below on this candle here. You now have a bearish range. And then you get retracement back into that. And then it's up close candle. Now, because you've already delivered buy side all the way through here and all the way through here, you only need buy side to come back to that opening price. And it can shift back downwards. But again, it's going to be the same thing. Do you get the delivery back through the other way? On like a 15 or a 5 and willing to ride that through the rest of the range? Especially with the regular trading hours chart. All of this fixing right here is going to allow for it to get torn through. All this here with buy side, ideally to fix just the sell side that was here. And especially with SPX, this low already being taken, could very, very easily sink, retrace, try to fix this during the actual trading hours, that's the only time it can really do it. And then either go back for this or do whatever. Because this gap here, from Friday to Thursday, getting fixed here, is telling you that this whole thing is already taken care of. So it can, whenever it comes through it, it can probably rip through it. Whether if for whatever reason it started up high and trades through lower, or starts lower and trades through higher, it should be able to rip through regardless. And that's how you can like balance a range out of it. Especially if it wants to do something like come here, rock it all the way up here, and then consolidate. And then come back and fix something on Friday. Again, with the RTH chart already running that exact low. So if it wants to fix this stuff now, because your opening is all the way up here, fixing this now allows for it to get torn through later. Now, SPX will eventually have to fix it, but that's really the only thing there. Now, we start looking at like Forex charts, especially with it being GDP. Running all of this here, shifting back bearish. Again, this high getting broke. Low that broke the high. Same thing right there, close below, CSD, all that, boom. You're now shifting to delivery. So again, if you're going to be bearish on Euro, what are you trying to go for? You got equal highs, lows here, hello. And then even on GU, same thing. It's floating right in front of this obvious swing low that the market rallied off of. And everyone that long this is sitting either here or they're sitting all the way down here. And so it could very easily be using that as a target. Especially if you want to apply some look back. Start looking back 60. Okay, we'll cast forward 60. What do you have as a target till 60 bar low? To actually be used as like a reference point. Like once your delivery shifts, you can only look backwards as to what you're going to be targeting. Even when you're here and you shift delivery, go back 60 on that time frame, what do you have from this point here? This high, this high, this high. That's all you have for reference points for the last 60. You've taken out 60 low, well over 60 low. So like a long-term low, like an 80, 90, 100 bar low. You start applying that to like a daily chart, and that's where you can find like really far extension moves that seem to keep like going and going and going. It's because it's going for something that's older than 60. So when you get that CSD and you're using reference points, this is all you have. Is this. UCAD, same thing. Why would it not want to run for this high? Or even if it wants to react off this, at what point can it be used to look and proceed higher to? If it needs to react off of this or anything like that. But even then, do the exact same thing. Load the broke the high, find the CSD, find the fractal, and then just take it. That's all it's going to end up being anyways. This low came from this high. High broken. High that broke the low. Boom. Enter CSD, and then just ride it the other way. And then you just go BISI continue, order blocks. Down close candle support. And just ride it till it fails. Honestly. Especially when you get for like distribution phases and everything, you're gonna see like FEGs, retracements into it, and then just complete shooting away from it. So, but again, look at reference points. If you're here, what do you have for 60? It's basically 2.5 days. These lows down here, these quote unquote lows, even though they're highs, but that's really what you want to be looking for as you're just kind of going through everything and balancing what you need to. So that's kind of the plan going for tomorrow at least. But I would be pretty ill-inclined to do anything that's like super crazy. 4 hours well in premium, blowing through a high, as well as a 60 bar high in terms of the 4-hour chart. Anyways, so it's more so really diving in and seeing like what you're actually looking for, and then playing that delivery. So that's kind of the mini rant slash lesson slash whatever you want to call it, but that's just really what to look out for when you're trading, when you're kind of hitting ranges and then pushing through that range even further, and then clearly displacing the other way and then just riding it through. If your entire range is balanced, you can pretty much shut it. So, but again, if you're going to be bullish, you would see it. You really would. So, but until 8:30 news, as of right now, you're in a sell model the last couple days. You really are. So, look for something that's actually a proper movement the other way. and then go from there. Well, it really does make a lot more sense. That would also mean dollar pumps if gold just wants to, you know, market maker model as it does. SMR's up there, original consolidation. So if it wants to exit to this, it needs to do probably some type of failure swing movement out, and then keep going. Or again, turn off wicks and just look at what bodies are doing. Notice how even though trades all the way down to here, you get this up close candle here, trades back up into it. So even when you're looking at just the bodies, you're looking for movement up into there. It could wick as high as it needs to, but like the bodies, you don't want it to be closing super deep and like digging into it. The wick can, and that's temporary, and that's totally fine, but the candle, like its closure itself, should not be. So that's kind of the whole thing there. But as of right now, it's pretty bullish for Dixie. Just to at least finish this. Or if it's gonna, it would just OTE into something ridiculous. But I am definitely down for a bullish GDP that gets revised and faded. And that would allow for low of the week territory. NQ can kind of slice through something. US can also slice through something. This obvious swing low here from 8. We're basically less than 10 points away from. Dow does Dow things. It's its own entity right now, but those two things doing that and then just running it back the other way. And at least make it like weekly open. It doesn't have to make it to Tuesday's high. Because it's 70 away, which is plenty to do over either 2 days or even 1 day. But that's the plan as of right now, this second. Because on Dixie, the only sell side that really exists is this low that was just created. After everyone that logged this breakout here. So if you're really going to be in the 60, then definitely allow it to do some type of movement like that, or even just a far wick if it wants to go like extra far for anything like that. Would definitely be down to just revise the whole thing. And then lastly, UVXY, how could we? You always inverse the market, so a lot of sideways, but it technically has, you know, it's broke bullish, but could that just be for range high, range low, something like that? And then just fade it for 2 days. And that would allow us to supermoon. Well, not supermoon, but just move higher. So especially with it closing like this, it's pretty nice for it to like gap down and punish, or even something like this. Aggressively close, gap up, aggressively close up, gap down to fix this. Even maybe something like that. And then just start the descent through. Which would mean something gets revised later. If it's going to gap down, that means we would gap up, because then, yeah, Dixie would get revised. That's if that happens. It could be the real report. But for 15-minute structure, you pretty much need to be bearish, at least internally on this. But based on this whole shindig right here, you're in discount. So as you're doing that, you can start to fractalize the middle and then go from there if need be. But that's a whole other thing. Don't even worry about that. So we'll see you guys in the next one. And